Excellent.
All right. Thank you everyone for attending this month's market update webinar for the month of October 2025. Let's start with some disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything discussed within the presentation. And of course, past performance is not a guarantee of future results. You can read up more disclosures on our website. And throughout the webinar, please feel free to use the Q&A button at the bottom, and we'll address the questions at the end. Quick summary about who we are. Silverstone Financial, the firm, is a fee-only fiduciary independent wealth management firm. We provide wealth management services, including financial planning, investment management, tax prep, estate planning, and so on. You can learn more about us on our website. And my name is Jeremy Eppley. I'm a financial planner that specializes in inheritance, gift and estate planning strategies. And my business partner and co-host, Gordon Achtermann, is also a financial planner who specializes in retirement planning and investing in a way that aligns with your values. I guess we can jump right into our performance for the past month.
Let's do it.
So for September, we had another up month. We've had green month after month, with the S&P 500 up 3.6% for the month. Most of that being driven by the top 50 stocks, which were up 5% in comparison to the broader S&P 500 being only up 3.6%. You can see a few names. TSM is not part of the S&P 500, but NVIDIA, Tesla, Apple, Microsoft, all these had quite large gains, especially Tesla at 30%, and TSM, which again isn't in the S&P 500. TSM is Taiwan Semiconductor manufacturer. They supply NVIDIA and all the other tech companies. So there were various news articles that led to all the tech names being pushed up. S&P GARP, which is a subset of the S&P 500. It's the 75 stocks when filtered down into companies that are growth at a reasonable price, so GARP. And it filters out some of the more hype stocks, which would be these some of the mega cap names here, and invests in some more smaller cap names. So smaller companies that are more value skewed, but still have quite nice growth from a historical and a forward-looking standpoint. Small caps, so smaller companies, still up for the month, but nowhere near the S&P 500 returns or the top 50 companies being up 5% versus small caps being up just under 1%. Global ex-US, almost matching the S&P 500, up 3.3% about. So continued good performance, let's say, for non-US companies. However, not as good as the S&P 500. But when we switch over to the year-to-date numbers, we'll see that non-US international companies have still been outperforming for the year, mostly due to investors moving away from the US due to actions that the administration has taken. US bonds up about 1%. Gold, another big winner for this month, up 10%. Continued, I suppose, concern with traditional fiat currencies. The US dollar, could be a few other driving factors for gold. Crude oil down 2%. That's not very significant. Oil is usually quite volatile. So it being down 2%, it's pretty flat for oil. But perhaps gas, when you fill up your tank, is a few cents cheaper. And then Bitcoin being up 5.7%, technically beating US stocks for this month, but about in line with the mega cap top 50, only beating it by, say, 0.73%. Moving on to, oh, if you're speaking, Gordon, you're muted.
Sorry. Gold hit $4,000 an ounce, I believe, a few days ago. Really kind of a big milestone for that.
Yeah, I'm sure a lot of it's driven by the Costco Gold little tabs that have been wildly popular. I've heard that you can go and buy some gold at Costco, and they sell out every time they put them on the shelves. I've heard.
Wow.
That's probably a minor part of um, year to date. I'll fly through this pretty quick since it was similar to last month, just slightly larger numbers. The top 50 S&P top 50 was almost 6% returns. S&P 500 almost is 14.5% return. So top 50 still outperforming slightly, by the S&P 500 and smaller cap or smaller companies in the S&P 500, still they're massive companies, have caught up even after there was a big disparity between the two in the beginning, the first half of the year. GARP up 9.3%, so still lagging the rest of the S&P 500, mostly because the S&P 500 is being dragged up by these mega cap names, which is where most of the value and a lot of the S&P's concentration is. Do you have something to say, Gordon?
I love all of these indicators. One other one that I follow is the Eurozone, which is up 36.5% year to date as of today.
Yeah.
So
You
really
can see that.
everything's doing well, but the Eurozone is the star so
Yeah,
far this year.
you can see that reflected in the global ex-US, which is more so
Mhm.
than just the euro.
Right.
Ex-US being 25.6% up for the year, but it is a good chunk. Europe is a good chunk of the world economy ex-US, so it definitely makes up a lot of the ex-US returns there.
And also, while the ex-US is many currencies, the Eurozone, that's one currency, and a lot of the outperformance of ex-US has been the decline of the dollar, which has been particularly sharp. The dollar has been particularly weak against the euro.
Yeah. Uh, I'll probably move on from this slide. I'll just point out that pretty impressive number for gold right there, 46.7% year to date. If any of you want to go back in time and watch some of my webinars from 2022, almost every single month, you would hear me say, "Wow, inflation's up, and there's concerns about the government, concerns about the world, but gold is flat." And gold is negative and gold is doing nothing. I think there's a lot of pent up just behind the scenes for years, like gold, what we would expect to happen would be gold to come up. And now that inflation is kind of flat and there are other drivers for gold, but I feel like some of those are finally being seen this year for whatever reason, most likely due to the administration change. But it's really interesting to see gold having jumped so high. Usually, I'm not a huge fan of gold. If you ask Buffett, he's not a big fan of gold, but all of our client portfolios, unless the client specifically asks to have gold removed from their portfolio, has a small allocation. So if you want to feel happy, go look at your account statements and you'll see it up a little bit. Moving on. So this chart, the average monthly S&P 500 returns, shows the historical seasonality and cyclicality of the stock market. I like to show this each month. A lot of people don't realize that there are an actual statistical effect of what month you are in, what month historically performs well or poorly. The worst month in the year is usually September, which we just completed, and did not follow the historical trend. And then December, which is usually the best month, Many of you might have heard of the Santa Claus rally, which definitely causes or contributes to December being the best month. We'll see if the end of the year is weaker than normal, because we can see, May, June, August, September, we're all gangbusters and doing quite well and beating the historical trends of those being pretty weak months. So it could be that we'll continue to see that happen for the rest of the year, and these months that are traditionally good, October, November, December, will be awesome. Or it could be a reversal where perhaps we've overbought, things gotten too expensive, too much euphoria in the markets. We'll see. And of course, if you come back next month, you'll know if we matched October's historical 0.9 average return, or if we're a lot higher or a lot lower than that. Anything to add to this, Gordon?
Mm-mm.
All right. For any of you that are listening to this in podcast form, feel free to come either onto our YouTube channel, watch the video replay, or live. We try to have it on the first Wednesday of each month. Of course, this month we had to reschedule to a Tuesday, but you can come see all these pretty graphs live. So let's move on to some notable events. We have 3 slides worth of notable events. Lots happened this past month. Yeah.
So first one up, I'm gonna talk through this slide. So we had the U.S. government shut down, and the president threatening firings of federal employees. I think today, this morning or yesterday, he floated the idea of not paying federal employees for um, their missed, not reimbursing them for their missed paychecks during the shutdown. Um, Unclear if that would be if that threat is even possible. The law that was passed actually when he was president, so he signed it, says that federal employees must be paid. So it's kind of interesting there. But the shutdown, it's hundreds of thousands of people not getting paid, and 100,000 or two more contractors. Um, Essential workers are still on the job. Some of them actually having to work without getting paid. So we'll see how long this lasts, but as it goes on for a long time, it could potentially start to erode the strength of the overall economy. And I think most people know what they're fighting over, which is healthcare, the One Big Beautiful Bill Act, um, was reducing the subsidies for Affordable Care Act, and reducing Medicare and Medicaid payments. So the Democrats are saying they won't sign something unless those cuts are restored. Next up, we have the Federal Reserve Governor Lisa Cook. This story. We have some updates this month. Um, the appeals court has ruled that she cannot be fired um, when there hasn't been any kind of trial. So far, the judiciary is upholding the independence of the Federal Reserve Board. If it goes to the Supreme Court, that could change, but there's been some uh, opinions. Hard to judge how much we really know about the feelings of the 9 Supreme Court justices, but there's some feeling that they may give special deference to the independence of the Federal Reserve Board, whereas with I believe it was the FTC, Federal Trade Commission, they said, sure, he can just uh, fire people that are not of his political party. Um, I think that if he does succeed in getting rid of her that would probably further undermine the dollar in the eyes of um, investors from outside the U.S. and many inside the U.S. just because the Federal Reserve, being an independent agency, is supposed to protect our currency against inflation.
Yeah,
And
we would see the dollar, really get hurt, and inflation would or interest rates would go down, which would help some people. But we would definitely see continued dollar probably depreciation, I would assume, and then a continued international uh, equity markets react to that. Be
mhm,
not a good thing, but interesting to see.
right. So, yep, they're playing with fire a little bit there. Um, Remains to be seen what will happen, but so far the appeals court has said no. And I think, as we mentioned, I mentioned last month, what she's accused of doing is the same thing that Trump himself has done, which is to list more than one property as a primary residence. Um, the term primary residence just means that it's not a rental or an income producing property, that they will live there.
I'll point out again because I find it funny we're still talking about it, about the irony from that I pointed out last month that he's trying to get her fired for fraud around, bank like applications for mortgages, which
Right.
he was literally convicted of in court. Um, so if she's not fit for office in his eyes, it's just some interesting irony. But we can we can move on from the story.
Yes, that's putting it politely.
Yeah.
Um, so next up, we have the H-1B visas. So H-1B visa is a special type of visa for in-demand, highly educated professionals to come from other countries and work in the United States. It's this particular type of work visa. And um, what they've done is added a $100,000 per year fee that somebody would have to pay, probably the employer um, would have to pay per person that they bring in under um, these particular visas. They're mostly used by tech companies and universities, and so it seems like it would have some long-term impact on our competitiveness for, well, since all the post-war era, the United States has been a magnet for highly educated professionals from other countries. A great percentage of people who come here under those visas apply for and get permanent residency, and continue to contribute to American companies, universities, in research and engineering and all the sciences, and in some cases social sciences and economics, all kinds of fields. But um, it will be mostly tech companies that will be willing to pay these high fees. Um, so that's also somewhat, it'll take years for this, um, the effects of this to be fully measured and understood, but certainly not a good thing for companies to have to pay that extra for engineers and so on that they so desperately need. Um, the fact is, China and India, they graduate more than 10 times more engineers per year, each country, than the United States does. They have a tremendous supply of engineering and science talent, and a lot of them would prefer to work in a country with more opportunity like the U.S. And so that program allows us to get some of the best most talented people from those countries.
Their
Um,
populations are so much bigger in the U.S. It makes sense that they graduate so many more.
Hmm.
But yeah,
Yeah. Um, and then the last one on this slide, we have this TikTok US China deal. So, um, China has called this a win-win. I think they're just trying to claim victory. I don't know whether it's a victory for us or for them, or there are some details that still haven't been finalized around intellectual property. So there's some chance that it could blow up still, but it's been agreed to in at a high level. Um, and so, a lot of people, myself included, have been calling for some kind of reins on TikTok. There's there's so much spyware out there. It's not like it's the only dangerous app on people's phones, but um, it'll be interesting to see what happens with the details. Um, yeah, so the I forget who is taking charge of who's going to be the new majority owner. Um,
forget if it,
U.S. controlled ownership.
I think Oracle's name was floated, but they also come up in another slide. I think there were a few. Maybe they were the back end partner on who runs it.
Hmm.
The deal is like as it was announced, but not all the details have been. So
Right. So this is an evolving story. Maybe we'll have some more details in a month or two.
yeah. All right. Slide two.
All right. So I'll talk about this first one, and then Jeremy is going to take over with the rest of the slide here. But EA, that's entertain electronic arts, rather, the video game and other um, uh, they have some other smaller assets, but the game company, game publisher, $55 billion LBO deal. So LBO stands for leverage buyouts. So it's private equity. Sometimes you have public companies buying other public companies in leverage buyout, but this one um, is a private equity deal. The really interesting thing about it, two things. First of all, I believe it's the biggest leverage buyout ever.
Yeah. Yeah. It's the
And
largest ever by a good amount, I believe. Billions,
mm,
billions. Yeah.
right. And so the the M&A firms are JP Morgan or whoever is handling this is making a killing for sure. But um, the interesting thing is the participation of Saudi Arabia's um, public investment fund. So that's their government's excess cash, sovereign wealth fund. So these are called. Saudi Arabia is one of the biggest ones. Most of these are oil money countries. Norway has a giant one also um, from their North Sea oil wealth. And, so it's an indication of the trend here that we're seeing with closer economic ties with Middle Eastern countries. The Middle East wants to diversify uh, their asset base. Um, which makes complete sense for them. And the West wants to kind of bring them in to our sphere and make them more committed to stability and less interested um, in disruption of the West. So um, we'll see how that works out. Like all these things, it'll be an evolving story to see what the next deal is with the Saudis, um, Qatar or UAE are the three kind of bigger states in this realm. Interesting that Saudi Arabia is the biggest one. They have been seen as not as moderate as the UAE or Qatar. So yeah, it's a big change. It's a big shift in kind of world economic alignment.
I'll also add a couple of things to the story. I wrote down three notes while you were talking there, Gordon. One, leverage buyouts, if you don't know, the leveraged word means debt. All right. Usually it's heavily indebted, and it's not the debt taken on usually by these hedge funds or private equity funds. It is they're indebting the company that they're buying so that one day they can somehow squeeze more value out of it and then flip it, probably go back to being public again or sell it some sort of strategic buyer. A lot of the times, these leverage buyouts work fine for the owners, but consumers, especially employees, a lot can be cut and slashed with a machete to get whatever the maximum money is. So we'll see how it affects it. Yeah, we'll see. Two other things I'll note. One, you see a lot of this with Saudi's public investment fund, where they buy a lot of video game assets. They buy a lot of entertainment assets. And I'm not a geopolitical analyst, but I have heard various takes on it. And a lot of people say they're trying to rebrand a lot of the image and make their culture more widely accepted in the Western sphere, especially with the plenty of controversies that Saudi Arabia has been a part of. You may have heard of the recent comedy festival and them throwing lots of money at comedians and bringing them over, and their previous investments in golf and trying to again make the history or the scandals that they have been a part of with journalists and other problems less in the front light when you think about Saudi Arabia, trying to make it think about entertainment and well, money and that kind of stuff. The third note that I'll point out was Affinity Partners is Jared Kushner's private equity fund, which is Donald Trump's son-in-law.
Right.
And there has been a lot of Saudi money going to various Trump affiliated ventures. They have Saudi Arabia has a director, or I don't know the actual title, but of cryptocurrency. And it seems like his entire job is to hang around the Trump family, finding ways to put money into whatever companies that they're launching and crypto deals and such. So again, not trying to be a political channel, but it is interesting to see these billions of dollars being thrown around by sovereign entities and having the president and other parties surrounding the administration profit. Yeah. Anything to add there, or should I move on?
Yeah, thanks for picking that up. And yeah, I think that's enough on that topic.
Oh, one more thing. It was a 25% premium to EA was trading on the public markets.
Mhm.
It's one of the reasons why the leverage buyout, this is the biggest ever, is they paid $25 or 25% over what it was publicly trading at. So most analysts were like, what this, they're way overpaying. There has to be some other reason that this is happening, which could be the leverage buyout or other kind of things, but there could be other reasons, again, being more geopolitical behind it, where it doesn't matter how much money the Saudi Arabian pension fund and these private equity deal firms pay, as long as their ulterior motives, that sounds maybe worse than I mean it to, but the other reasons other than making profit might be what's driving such high valuations.
Mhm.
All right, so moving on, Rocket Mortgage purchased Mr. Cooper. I found out about this because my mortgage was purchased by Mr. Cooper back I don't know, last year or 2 years ago. And Mr. Cooper is the country's largest mortgage servicer. So I got an email saying, hey, we just got bought. And it actually turned out to be a very interesting story. Mr. Cooper is the country's largest mortgage servicer, and Rocket Mortgage is the country's largest mortgage originator.
Yeah.
And so together, they are now the largest of both. And it's a $14.2 billion acquisition. It's two very, very large companies. I believe they're both private. I'm not sure if, I don't think Rocket Mortgage is a public company, at least not yet. I might be wrong.
I'll check on that while you're.
Okay. Um, so consolidation helps bottom lines, helps cross-selling. We'll see how this affects consumers. And I'm sure it'll be interesting for the end client, which in this case is actually me. So I'll let you know if anything terrible happens in the future.
Rocket Mortgage is a publicly traded company.
Okay. Do you know what has happened with them in the past month? Did the markets see this as a positive news story?
Let's see. RKT is the ticker.
So we're not fine, even though you mentioned the ticker, we're not necessarily recommending or not recommending this company.
It's been kind of trending down since a month ago.
Okay.
It peaked, yeah, in early September
Okay.
at around $21. I'm sorry. Yeah, $21 a share. Now it's at 17. But it was as low as 9 back in December.
Interesting. Just some general finance
Fairly volatile.
some general finance knowledge, or for those that didn't end up studying it. Um, Usually the acquirer stock will fall after an acquisition, and the acquired stock will go up. And the general, and this is just on average for acquisitions between two public companies, it's usually because the markets think that the person that the company that's buying the acquiree is overpaying. So there are actual whole hedge fund and private equity fund strategies, and these are usually private funds. You have to have really high net worth or alternative investments to be able to have access to them. But there are these what are called arbitrage, M&A arbitrage hedge funds, where their entire deal is they short the company that is buying another company, and they buy the company that is being bought. And the assumption is, well, they can get pennies difference based on the valuations and such. Might have gone over some people's heads, but finance nerds really like that kind of stuff. I'll fly through these other two since they seem pretty similar to me. NVIDIA bought $5 billion of Intel stock, which is interesting. They're rivals. They're both semiconductor companies, and Intel has been struggling for years, and NVIDIA has been the best performing stock for years. And so this comes after Intel had a 10% stake from the US government, and then now another $5 billion stake from NVIDIA. So it's kind of, Intel hasn't been a great investment, but at least compared to the other semiconductor stocks, but it's seen by a lot in the US as kind of like the big banks were in 2008. Too big to fail, or Boeing. Like these are private companies, but they're seen as national importance. They can't like let them fall behind. So it's interesting to see various institutions, the government and NVIDIA, bolstering Intel since they're falling behind their other competitors in TSM, NVIDIA, AMD, even like Samsung and some other manufacturing, semiconductor manufacturing companies. And then AMD, which was another one I mentioned, is an NVIDIA and an Intel competitor, jumped 30% as OpenAI, which is ChatGPT owner, doing all the various big AI stuff, is looking to take a stake in AMD. And of course, then OpenAI will buy chips from AMD, and then open like it's kind of a cycle. OpenAI gives AMD money to buy chips, and then also buys part of their company, and it gets them more and more integrated between everyone. There's just lots of M&A deal, lots of big money movements. It is kind of speaking to me like maybe a bit more of a bubble or this AI stuff. Of course, I've seen it, a lot of the technology is awesome, but a lot of money is being thrown around, and that does bring some concern. What do you think, Gordon?
Yeah, I agree. I feel like, even if all of the productivity, it's a double-edged sword, if these companies are profitable, then that means that AI is taking over more and more jobs. And, what I worry about is an acceleration of the where, people who haven't been able to invest in these companies that are taking over everything, will be left behind. And yeah, it could be a bubble at some point. There will be backlash against job losses. A lot of these jobs that are potentially going away because of AI are good paying jobs, in fields like legal research, basically anything entry level or repetitive, uh,
Computer
is,
programming, yeah, there's been a lot of AI taking over some of the.
yeah, yeah. I feel like, I saw a post by someone who I respect saying that, the thing that kids should go into if you really want to have a job security is theoretical physics, because that's really where the really big leverage in research around these chips and making them ever smaller and more powerful, um, rather than coding, which is uh, theoretically going to be taken over more and more by AI. Um,
You got quantum computing and fusion, both physics problems.
right.
That's it.
And yeah, Intel, I believe, is the largest U.S. manufacturer of chips, in terms of like how, just they make, they still make uh, the chips that run on PCs and laptops. AMD does as well, but I think they call those forges. Chip forges are the factories where semiconductors are made. And so, that's why Intel is kind of in this too big to fail category.
Yeah, yeah. We'll see how the chips and the AI and all that stuff works out for any Star Wars fans. I'm just waiting for like a C-3PO. I think that'd be really cool, but I think that's many years out, unfortunately. Um, all right, last slide. Six. I added one this morning at the bottom. Just it was announced today, which we'll end on. So I'll try to fly through this. So Oracle shot up 36%. Another big tech name. A lot of people. It's not really a household name. They do a lot of cloud computing. They actually do a whole lot of stuff. But they rocketed 36% after the company during their earnings call unveiled amazing stock projection, growth projections for its cloud infrastructure. A lot of that has to do with AI. And we saw Larry Ellison, which is, I believe, founder and CEO of Oracle, getting $100 billion richer in a day or something like that, or in 2 days, something, and started rivaling Elon Musk, the world's richest man. But I don't think Elon's hurting too much. It was announced this month that his net worth has officially crossed half a trillion, $500 billion. due to Tesla and other companies of his becoming more valuable for a myriad of reasons. But yeah, half a trillion dollars is a lot of money. It's quite a bit of money. And on a side note, he bought $1 billion of extra Tesla stock. Um, Most of his money is tied up in Tesla, so I'm not exactly sure where the cash necessarily is coming from. It could be some sort of leveraged thing where he's collateralizing Tesla stock to buy more Tesla stock. I know this probably comes as a move of he wants more control over the board so that he can grant himself more stock options and other have control over the future of Tesla. So we'll see if he continues down that road trying to buy more of the company, or if in the future the board tries to distance themselves from Musk for a myriad of issues and scandals that he's been involved with, especially with being political and his client base being of the opposite political party. Very interesting to see. Moving on to Disney. Disney announced that in 2026, beginning of 2026, first half of it, I believe, is going to officially shut down Hulu, roll it into Disney Plus. That was the expectation by most analysts after Disney bought Comcast's 1/3 stake in Hulu, and apparently is going to become one of the little cards in Disney Plus for any of you that are subscribers to it. And it's going to take over, I believe, the Stars channel, and is just going to host the more adult content for Disney Plus. Yeah, interesting to see continued M&A and such grinding around in Disney, especially since this month, it seems like they announced a lot of things. They had increased prices, if any of you noticed, and they increased prices on the heels of the Jimmy Kimmel censorship controversy. And I know there was a big thing online where people were canceling Disney Plus out of in support of Jimmy Kimmel and in to rebuke Disney. Interesting. I feel like that's not necessarily all what's happened this month has been good news for Disney. Nubank, many of you may not have heard of it. I've actually been following Nubank for many years. They're the largest bank in Latin America. It was founded in 2013. They're a fintech. They have 110 million customers across Brazil, Mexico, Colombia, and some other countries. It has like no fee credit cards, digital accounts. It seems like they've figured out a way to serve underserved and difficult to serve consumers that are across many, many countries. And it was announced that on September 30th, they applied for a U.S. national bank charter. So they might come and start competing in the U.S. markets, which honestly sounds pretty interesting. I've heard good things about Nubank, and having a fintech bank rather than like a fintech brokerage in Robinhood, or a fintech like their SoFi bank is kind of the main fintech bank that I know of. But I could see Nubank really putting a fire under some of the traditional, Bank of America or Citi or Wells Fargo or JP Morgan Chase, which are the four biggest banks in the US. And if any of you have your checking and savings account with them, usually at least I recommend to bank with other companies, since they pay higher interest. At least for savings accounts, trying to have a high yield savings account. We have almost all of our clients have high yield savings accounts at Altruist, our custodian, that we're getting 4% before the Federal Reserve cut rates, and are now making 3.7%. That's a lot better than the 0.01% that Bank of America or Wells Fargo or JP Morgan or Citibank pay. That can be hundreds of dollars a month difference. And I know I've made that recommendation multiple times. Hey, you should change this and it'll make you $400 more per month.
And they have a higher teaser rate right now, I think, right? 4.1 for the first 3 months or something like that.
Oh, for Altruist, yeah.
Yeah.
I think they're trying to capitalize on the the rates being cut, be like, hey, if you don't want your rates to be cut, we can bring over some money. But yeah, it's a pretty good deal. We so far, Gordon and I have been aligned with Altruist as our custodian for a long time, and we've been very happy, especially with some of the services they have, such as the cash accounts. They've been wildly popular, and we use them ourselves.
Mm-hmm.
All right, we'll fly through these last two. It's getting pretty late. We've been rambling for a bit. So Robinhood announced that they have filed what they're calling Robinhood Ventures Fund I, or Ventures Fund One, which is a closed-end fund which aims to let retail investors buy shares in private pre-IPO companies. So it's trying to be a venture capital fund that's publicly traded. It'll trade under RVI if it gets approved, and there are a lot to think about. There's a lot to think about this, where their goal is to democratize finance and allow anyone to be able to trade these funds that are traditionally only available to ultra high net worth individuals and people that are like us, financial advisors, that understand the intricacies behind and the risks with investing in these. They're trying to let anyone invest in it, which is a noble pursuit, but it also raises some concerns, at least for me, about people investing in things that they don't understand that are more risky than they think. But then again, on Robinhood, I used Robinhood before I turned 18, when I was actually 17, and they were happy to let me trade leveraged call options, out of the money call options. For those of you that understand what that is, like, it's very risky. It's probably not any riskier than venture capital. So if there's myriad ways to lose your money, so I guess one more way is nothing wrong. What do you think, Gordon? You have a lot of thoughts on whether or not this is a net good for the public, or a net bad?
Well, yeah, I feel like um, investors can do well with it. I think that it's investing in venture capital is something where you either have to spread your money over a lot of different ones and hope that, one goes 10x, um, a couple of others break even and maybe you don't lose much on the other ones. Um, and um, or you have to really do a lot of research and pick and choose very carefully and invest in companies that operate in a field where you have some expertise. Um, if you're an engineer working in, I don't know, signal processing or something, then, maybe there's some, uh, you wait until you see some opportunities that are in the field where you can really evaluate the technology. And, so it can be great. The danger is always that, people will just kind of indiscriminately take on more risk than is wise.
It'll be interesting if I think it says a closed-end fund, not going to be necessarily an exchange traded fund, but if it's optionable, like buying call options on a venture capital fund, I think is going to be what some Robinhood people will do. And
Mhm.
that for the call options are just kind of a riskier bet on an investment. Um, I think it'll be interesting, and we will definitely see on Wall Street Bets a few accounts blow up at some point.
Mhm.
Anyway, talking about risky bets, this last one was announced this morning, so I had to change the slide and update it for this one. So ICE, which is Intercontinental Exchange, which is the owner of the New York Stock Exchange, they are investing $2 billion to acquire a major stake in Polymarket, which you might have heard of Polymarket, or at least what they do, which allows users to trade on and predict and gamble essentially on real world events such as elections or economic indicators or major news stories. I think there's one right now that's when will Taylor Swift's wedding be? Okay, there are some really interesting gambleable, it really is gambling in this case, options to be able to put your money into. A lot of this, it's based on futures, which is a contract type in the finance markets. Those were invented back in the day so that companies and professional investors would be able to hedge various outcomes of, okay, well, I'm worried about inflation, or I'm worried about the VIX, which is a volatility indicator. So I'm going to buy this future that predicts this outcome, and not because I'm speculating on this specific outcome, is because if this outcome happens, my portfolio is going to be negatively impacted. So it's a hedge, it's a protection, some insurance for your portfolio. So Polymarket, which I believe is not a U.S. company. It's either Panama or Bahamas or something. It is, I believe, an offshore company, which kind of raises what was the company from Sam Bankman-Fried that went bust? I don't know. Whenever it's an offshore finance company, it starts bringing a few, fraud or potential. There's less regulations, which is why it was founded in those countries. And why would you found your company in a place that has less regulations unless you're planning on doing something outside of normal regulations? Either way, it brings Polymarket, this move from the New York Stock Exchange brings Polymarket into mainstream, and we will probably see more election betting. We will see more, Taylor Swift betting, other kinds of interesting stories and investment opportunities. Robinhood, you can do a lot on there too. They would say it's a good thing. It democratizes finance, allows everyone to be able to bet on anything for whatever reason, which can be good for people. But a lot of it does boil down to gambling, which could be really problematic.
Quick search says that Polymarket is US, based in New York.
Interesting. Maybe I'm
There could be
missing
some
of
participant or big, part owner.
perhaps I'm thinking of a what's it called? There are a number of these marketplaces that allow you to trade these prediction outcomes, and I thought Polymarket was the Panama one, but it might have been in the other or one or two major exchanges that is not New York based. But good, thank you for correcting me. It's best that we don't have false information on the internet.
It's yeah, I mean, I I was really shocked when the professional sports started embracing DraftKings and all of that. You get odds makers, right before the games. I think it's inconceivable that athletes aren't betting on their own games and throwing them sometimes. But just the nature of human beings and greed and opportunity. So that ship has sailed, where we become a more and more gambling uh, centered culture. Sports betting, legal casinos everywhere. They're trying to put one in Tyson's Corner, uh, which I think would be a disaster since, it's a very, it's a prestigious address. And anyway, but that ship has sailed, and it's just yeah, Polymarket's just another example of that.
All right. Well, those were our news events that we wanted to talk about, and the markets. I don't think I saw any Q&As come through that we didn't answer during the presentation.
Right.
So I think we'll probably wrap it up. I think we're getting close to the hour mark, so we rambled long enough. Thank you everyone for attending this month. And as always, you can catch the replay if you missed part of it, either on any podcast platform you use or on YouTube. And feel free to share this with anyone in your circle that might enjoy something like this. So yeah, thanks again, and we hope to see you next month.
Thanks, Jeremy. Have a good evening.
All right. Have a good evening, everyone.